Good afternoon, everyone. Welcome back to another bar by bar analysis here on my channel. Today is April 11th, 2022, and we are looking at a 2000 tick chart with a 21 EMA in blue here and a 200 EMA in magenta. These were the only indicators that I was using until I had a revelation this weekend. As price action traders, one of the things we really focus on is price action, but we always harp on context and how important context is when trading this market. Towards the end of last week, I started to realize that earlier trades that I would see play out during the week, some trades would work, some trades would not work, even when you were trading the overall context. And so it got very frustrating for trades not to work out. And last week was a difficult week to trade. And so I didn't want to clutter my chart with a lot of indicators, but I had to ask myself, what other indicators could I use that would give me a lot of information without cluttering my screen too much? And I'm not a fan of MACD RSI indicators only because all of it's data you would receive after the fact. It doesn't necessarily give me the information I need in the moment to analyze and take trades. That being said, I introduced volume into my analysis. Adding volume to the market has changed the way that I see how price action plays out. It has changed the way that I see the market. And so I want to do something a little bit differently today. Rather than going bar by bar and analyzing just price action, I want to go through and show you how volume has helped me in the trades that I took for today. I ended up finishing 3-0. I won all my trades. There were some trades that I was thinking about getting into, but then volume helped me stay out of those trades. And I want to show you how I managed to find that indicator is a very useful tool for me. And I'm continue to play around with it. I mentioned it in the video last week that I'm not finished developing my skills as a trader. I'm continuously trying to learn. I'm continuously trying to get better, and I want to try and figure out what things I can use to really get the edge in the market. And I'm not looking to pay for any fancy indicators. I'm not trying to clutter my screen with a lot of stuff, and I know it might look a little cluttered right now, but I've gotten used to having a little bit of volume on the screen, and I'm still trying to figure out how to use it and adjust the settings up a little bit, but I want to show you exactly what I mean here. So I don't want to delay the point too much. I, as normal, drew my resistance level at the top and support at the bottom here. We had prices that were strongly pushing below EMA and hugging right below EMA before market opened. Now, look what happens here. As prices push up above EMA, we get this nice bullish rally. You draw on your short-term trend, right? We have a break of that short-term trend and attempt at a new high if you consider this, or even, you could say that there was going to be some sort of attempt made before prices returned. Now, before even seeing how the trade plays out, right, this is kind of what I had at market open. And it's very clear to see you had prices come down here, come back up. And as prices range back and forth, you have a little bit of a double bottom there. I'm sorry, a double top there. That's where I'm drawing a range at play. And so what are the range rules? We're trying to buy when prices are low. We're trying to sell when the prices are high, right? So look what happens here. And and I'll show you with the volume indicator. As prices print, notice how volume goes down. The trend is down for this volume, which is funny because as the market opens, you expect there to be a lot of volume. What's happening is as prices come to the high at the highs of this range right here, the volume goes down because a lot of people aren't trying to trade long into the highs here, right? When you think about big institutions, they're not trying to buy as prices are pushing through the top here. So I notice as volume's going down and prices are going up, you see almost a rounding pattern. And right here, you get this big bearish, you get a nice bearish bar here and a big influx of volume, right? A lot of traders coming into the market. And where are they going? They're trying to sell prices back down to the bottom of the range. So this is where we use volume in confluence with actual price action and analyzing how we see the market, right? With our regular price action trading rules. You have a short term that's working up with a break, looking for that new high. We have a new low here with a first entry short. Prices come up. Second entry short, the signal bar is fairly decent. A close on the bottom 1/3 of the overall candle. I saw this doji bar and I thought of taking a risk right here. So even though prices are coming above the EMA here, you have to see the EMA is starting to flatten out. We've got a range at play here. You see volume go down as prices start to curve up. So you got less people trading because people are not trying to trade long into this. And you'll notice as you enter this trade, volume will go up. And what I've noticed is sometimes these volumes come in pairs. I'll look at maybe two, three, four, 5 bars at a time. You have to look at the overall structure, right, of what volume is doing, right? While you have an up influx of volume on this bar right here, the overall trend of volume is going down as prices are going up to the top of this range. So this is a second entry short. Even the indicator marks it. If prices tick below this signal bar, that's a good place to go short, right? But the only way I really know that is because I have this volume indicator here that's telling me the volume is going down as prices are coming up here. And then you have this big influx of bearish pressure with a nice signal bar there. You're just looking for a solid entry at this point. Sell high, buy low, right? We're trying to short at the top of this range here. So as prices fall, you notice volume increases. More sellers are coming into the market. And where are they trying to push prices to the bottom of this range? Now, you have it's not perfect, right? You have an influx of volume right here, and then volume starts to die down a little bit. And what does that mean? That the move has already been made. A lot of buyers and sellers are not going to try and buy anything right here. They want to wait till they're at the bottom of this range here. So, no surprise, you get a little bit of indecision here on this bar before that volume starts dying down in this direction, and we have to see what happens as prices continue on. We're looking for prices to move back from the bottom of the range to the top of the range, right? But you notice, look how volume is starting to wane. It's starting to go down. So that's how I at least used volume right here for this trade. And notice what happens as prices come to the top of this range, the volume starts to go down as traders are not looking to trade. But as the move starts happening back down from the top to the bottom of this range, volume goes up. And there's a sharp increase in volume. A lot of sellers start coming here, start selling on this bar right here, and then this bar right here. And what does that do with prices? I mean, it pushes it strongly below these overnight lows. And I mean, this is really all you see at the time. So you have a lot of volume here, but then volume pulls back as prices try and figure out what they're going to do. A lot of sellers and buyers are not trading right now, and that's why the bars are the way they are, because the volume is low. But then as soon as a decision is made on where the market's going, there's when volume comes in and people are starting to sell. Now, that being said, volume is not everything. Price action still matters. And I know you can see the arrow here, but we have short-term trend working out. Prices are working from overnight lows. Where are we expecting them to go? We are expecting them to come back up into this range. But the other thing I started to see was overall downtrend at work, right? We're working off the highs here, and it's not perfect. You have to try and find some sort of downtrend here, but there's a lot of support down here. Prices are not continuing lower, so I was very hesitant to draw a bigger downtrend. But I don't want to get off track here. So as prices come up, you have the short-term trend at play with a break looking for a new high. We have a new high here with a first entry long, second entry long. It's a bigger signal bar. It really shouldn't be blue. It's probably more of an aggressive trade trying to go long here. But what the other thing I'm looking at is what are prices doing? Now, at the time, this range wasn't like this. Let me actually delete this for a second. I wasn't looking at a range. What I started to see was prices came from this high here and prices are working down to overnight lows and the EMA. What's happening to the volume? The volume is starting to go down as traders are waiting to enter the market. That's what this volume is showing us. As volume's going down, traders are waiting to enter the market, waiting for that good buying opportunity. And as soon as this second entry long happens, you have volume that starts to come in. There's a 2 bar pair here, and that's just enough for a scalp before prices push back. Now, it really depends on how many points you're going for, right? You may have to change up your strategy just a little bit in order to get into these trades, and that's still something I'm working with. But if you're going for 4 ticks, and you enter 1 tick above this signal bar, you're entering at 5, you're out. You're out at 51. If you're going from 50 to 51, you're out for 4 ticks right there. So prices continue to chop along a little bit here. And as we started to see more of this price action form, this is where I drew this trading range. And now volume isn't perfect. Again, we still have to try and follow price action rules here, but volume helps a lot with understanding context of what market's doing. You can see in this little clump right here, volume is steadily making its way up. Now we look at what prices are doing. Prices are steadily moving up in that direction. The important thing is trying to time an entry and get into the market in a way that makes sense. And how do we do that? Using price action rules. So fast forwarding just a little bit, prices push below these overnight lows. And also these rectangles, I'm trying to learn how to use supply and demand, just another form of technical analysis to help with trades. So if you have questions on what that rectangle is, that's all it is. But as prices push down, you have a little bit of consolidation here as waiting for this EMA to catch up before prices start to push down. Now, I didn't have, you see this, there's a bigger range that I had drawn in here, but you wouldn't necessarily see that. What I was looking at this time was we had this moment of consolidation waiting for EMA to catch up. Prices are consolidating a little bit, waiting to catch up. You have a new high here, short-term trend working down with a first entry long. Prices pull back, and now let's see what's going on with volume here at the time. So as prices consolidate, it's very hard to find any entries. So we're just staying out of all of this. But as prices start to push down, look at where my cursor is at, starting here at the top. As we start to push down, you see volume steadily decrease. You got this stack of bars decreasing. So what does that mean? We could be looking for a time to potentially correct a little bit back to the EMA. We have this new high with a first entry long. Prices come down. Next bar forms, and volume's in the way. So after this next bar forms, if prices push above this signal bar right here, which is a doji bar, but if it pushes above, that's a second entry long, failed breakout, plenty of room back to the EMA, and the final thing you're looking at, look at this volume. You had prices coming down as volume is going down, so people are holding off on trading, and you get this huge spike, this huge influx in volume. One tick above the signal bar is the way I entered, 2.50. Prices push up for an easy scalp there. Again, if you're going for 4 ticks. Now after that influx happens, volume comes back down and it's a little bit steady. You have 3 bars here, increase in volume, increase in the direction you're going. We're going down, so prices are continuing down a little bit. But this is where I entered another trade. Now I already have it marked so you kind of see the trade I took, but we had prices work down, starting to make a bit of a range here, right? You have this new low, prices come up for a first entry short. I'm thinking, okay, I want prices to push up above EMA, come back down for a failed second entry short to go long, come back and touch the top of this range. Now this is where we go down to volume and see exactly what volume is doing, see if it can help us somehow confirm our bias. Starting with this bar here, we have volume pushing up. As prices are pushing up, we have a short-term trend in play here, and as volume comes down, people are waiting to enter on these 3 bars. So volume's coming down, traders are waiting for that good signal bar to form, and there it is, failed second entry short at the EMA before prices push up and make that scalp. Again, 4 ticks here, 450 to 575, 4 tick trade there. You're in and out real quick. Now, it definitely would have been better if we had more volume on these next bars that formed, but it's impossible to know where the volume's going. And that's why I'm saying volume can be it's a very limited tool. It can only help you so much. The price action rules still matter and overall context still matters. So if you're going for 4 ticks, you get that scalp before prices pull back down. EMA is starting to flatten out, not looking to take any trades. And the final trade I want to talk about today. So this is the trade we just talked about. Prices kind of chopped along for a little bit before they push down below EMA to the bottom of this range that I have drawn in now. Prices came and tested these lows again, and so that's where this trading range kind of comes in play here. Then we have prices push above EMA. No way to enter this really. It would have been nice if we had a failed second entry short with a new low first entry short. Second entry short on this bar would have been great to go long. You see volume kind of confirming the trend just a little bit as volume steadily increases. We have a short-term trend in play here as prices move up. Then prices come down with a break looking for a new high. Notice what volume is doing. After coming from this high here, volume is steadily going down as prices come down to EMA. What does that mean? People are waiting. People are waiting for a good entry opportunity. And price action rules still matter. We have a break looking for a new high, plenty of room up to these highs. And now as volume goes down, you notice this huge influx in volume come in. Huge amount of volume, but you're not looking to go long at the highs here. So we're sitting on our hands, but we notice this huge push and traders entering the market trying to trade. This next bar that forms makes nearly a double top. We have a break looking for that new high, double top near the highs of this trading range that we have in play. Huge volume coming in. This was the last trade I took for the day, looking to go short back down to the bottom of the range. The only reason why I took this trade was because we had room to the EMA. And my price target has been 4 ticks. If you enter 1 tick on that 4, looking to go down to 3, Next bar forms, easy scalp, prices push below EMA, a lot of volume coming in, and even if you're going for 6 ticks here or 8 ticks, you definitely would have been out before prices hold that EMA here. We had a new high with the first entry long, second entry long. Now, why didn't I take this trade? I was kind of hesitant because volume really wasn't telling me much here. It looked like volume was down, then it shot up for just a second on this bar, and then it came back down. I guess depending on how you interpret that, you could enter there looking to go high, but after this uptrend played out, I thought with this strong bearish signal bar, we're going to push back down to the bottom of the trading range, and that actually happens. So that's why I didn't go long here, even though it was a second entry long. But again, I'm not a pattern day trader. I'm a context trader. I want to trade context. Notice as prices are coming down here, the volume is being pushed up. So that means traders are starting to flow into the market. More traders pushing the prices down. And that's constantly been this thing that I've been seeing using this indicator. Now this is only the first day that I traded using this. I'm still testing some things out. I'm playing with the settings a little bit, but I am noticing, right, even as I chop along here, as prices start to push up, notice how volume is increasing. Volume is increasing, comes down, volume is increasing. And then once you get more of this volume, notice this volume is starting to come down. Prices could be losing that steam. And what else is telling us that? I mean, we're in a downtrend. You have this 200 EMA coming up here. As prices push up to this 200 EMA, institutions are not trying to go long into that. So that's just telling us, hey, we got to be careful. We got to be very cautious about trying to go long here. Now, by this time, it's 12:30. This was my last trade for the day at 10:46 Central Time. But yes, to sum up the video, I do want to introduce another indicator here to my trading. I think that volume is crucial. It's a very important part to understanding context of the market, because you could very well have bars that are chopping up very slowly and you think prices are going up. But if the volume isn't there, if a lot of traders are not buying into that market going up, it can reverse real quick as soon as sellers come into the market, as soon as volume flows into the market. And that's when you get stopped out of a trade, because you think prices are going to continue going up, and then real sellers come in or real buyers come in and reverse the trade that you thought was going in that direction. So I think volume is a very important tool to use. I'm continuing to play around with it as I try and understand what it's telling us. But if you're trading right now and you're noticing that things aren't going as well as you like, or maybe price action isn't telling you enough, or you're following price action but you're getting stopped out of trades, well, there's a clue there that you can't see. There's something that's missing, and that's what I've been trying to find, and I think volume is a great indicator that helps with that. So a little bit different of a video today, but I hope that you guys get something out of it. No video tomorrow or Wednesday. I have to work the next 2 days, and that's one of the reasons why I wanted to do somewhat of a different video, because people can watch this and you can get some of these tips and tricks to maybe help you throughout this trading week. So if you've never tried it, give it a shot. Just see how it helps your trading. It could help you stay out of trades too. But I'm very curious to know what you guys think in the comments about this video. Most likely the next video I post will be on Thursday, so I will hopefully see you guys then. If you like this video, please leave a like, subscribe, and don't forget to turn on post notifications so you know exactly when I post these videos. If you found this video or any of my videos beneficial, feel free to share it with a trading buddy, because it never hurts to have that additional resource. In this business, we have tools that we use to help us see the market more clearer and better. So let's use them to try and get better every day as we continue to master this market and become as profitable as we can. Thanks for watching, and I'll see you next time.